Good morning, traders. This is Rick Majors here at Opteck.com. Welcome to today's daily market briefing. Now, Wednesday, May 21st of 2014. This has been a week full of surprises, changes, and absolutely nothing happening all at the same time so far. Now, last week we had actually come into the market starting to talk about U.S. dollar assets going up, starting to look at European, Australian. All right, basically the American market versus everyone right now to take a leap forward. It has been a bit of a surprise and at the same time exactly what we expected. The dollar has dropped a little bit further. It's gone from one support level to the next, but we're not actually expecting it to break down into any further levels. What we're experiencing right now is like this. We are simply having a large conflict of information, and a lot of investors aren't really sure where to go with this. U.S. dollar assets now, manufacturing-wise, retail-wise, were a bit disappointing. Consumer sentiment is actually down. However, news from the housing market, the new houses being built, new orders for houses to be built are up. Real estate market is actually doing well, and this is a really great sign of economic recovery for the United States because of the fact that obviously what really died in 2008, what died in the global financial crisis was the real estate market, where I have friends over in the States right now who will be happy to sell anyone a house because they're so cheap. You can buy a house there for $20,000, a nice small cottage. No one has the money to buy. But now the fact that we're actually seeing that housing purchases are happening, and housing purchases that are not on credit entirely, that are not completely mortgaged, that are not out on loan, this is a very good sign that people are getting out of their shells and are willing to spend money on things. Now, Europe news. Europe is actually, it's doing well, but it's not at the same time. Now, it's doing well in the fact that the people who are in charge, talking about the European Central Bank, are getting themselves in line. They're doing anything they can right now to keep a recovering situation to continue into the next coming months, especially through the summer when it could get hard for them. However, Germany, who, again, is the backbone of the Eurozone's economy, is not meeting expectations. The remainder of the countries that are in the European Union right now are not meeting expectations. So a stimulus plan and the demand, basically the ultimatum that Draghi himself, the president of the European Central Bank, had set already for June, is going to be crucial to seeing exactly how people respond to the Euro's current losses that are going to be happening in the next couple of weeks. Now, coming out of also Australia, Australia is taking a little bit of a dive right now. The Japanese yen is holding steady. Okay, but I've been looking at a lot of other brokerages, especially in the Forex community. Currency traders are biased towards the dollar going up right now. The sentiment is still strong that you should be buying into the dollar, that you should be looking for it to go up at the end of the month. So I am holding my positions currently. I would recommend to people to keep an eye on today, see how things are going. As we can see here on the schedule, the last item of today at 7 p.m. GMT is the FOMC meeting minutes. We also have FOMC members speaking. We have FOMC, Federal Chairwoman Yellen speaking. All right, we have crude oil inventories, and we have another FOMC member speaking after that. All right, crude oil inventories are set to decline. I don't know if I'm going to really seeing this one as a major impactor because this is something that everybody knows about already. Crude oil has been hitting a bit hard on the reserves recently, and we're seeing not just in the United States but worldwide an expected loss of reserves at this point. It's going to come back as production gets increased and things like that, but as I'm seeing it right now, I don't know if that's going to be a major factor. These speeches, however, and the FOMC meeting minutes, the FOMC is really what we want to pay attention to today. This is what's going to be determining whether we should be seeing the dollar start moving up by the end of the week, or we might have to wait till next week till we see that upward trend. The upward trend should be relatively strong just about on every asset that is traded against the dollar. However, I wouldn't be surprised if it was a little bit more steady. Those of you who are, again, trading for the dollar to go up in the month, it is still a perfectly wonderful opportunity. However, let's see what happens today, because if it does drop a little bit more, you'll have a better position if you want to hedge. I know some people did take it a little early. I took it with some people a little early. My recommendation to you is simply hedge. Hedge your trades. You know how to do it. This is your way of putting yourself in a better position than you were previously. Now, we had the BOJ press conference a little bit earlier today. Not something that I'm necessarily worried about. They did say that they don't see any reason to increase stimulus at this point to weaken the currency any further. They're saying that a lot of economic information coming out, manufacturing purchases, retail purchases, consumer sentiment is doing pretty well right now. We'll see how that continues throughout the week. I don't see them personally as staying too steady. It's not a country that is known for its stability economic-wise. Now, we have a couple other ones here, MPC asset purchase facility votes. These are not something that are used for used to changing a lot, so we're not really going to be seeing anything overly interesting happening with these. Retail sales, however, are set to go up this month. It is the summer season. In Britain, retail sales do usually see a pattern increase just as the weather gets warmer. People like to get outside a little bit more. There's a little bit more economy going on. Private retail is getting a little bit more interesting as people start, to open shops up that are only open in the summer. Things are like that. So you will see an increased amount of buying here, as we can see again in the April-May seasons. Now, May here, and this last one, we actually did not see. We saw a bit of a loss, but considering the fact that it is 0.01, and before that it was actually only at negative 0.6, we should be expecting it to at least get up into the 0.5, 0.6 region for the summer increase. As you can see, after that in June it increased to 2.1% after that. So this is exactly the beginning where things are going to start picking up. Now let's continue on just to talk again a little bit about tomorrow. We have a whole slew of different things coming in here. All right, this is the chance for the euro really to start shining, even though the forecasts are not necessarily great on all levels. All right. German flash manufacturing is really the only one so far that I'm seeing that looks like it could actually pick itself up right now. But French flash manufacturing is not, and the regular flash manufacturing PMIs for the euro that go around the Eurozone are not really looking to be something that I'm going to have a lot of faith in right now. We have second estimate GDPs coming up as well. All right, unemployment claims, core retail sales in the Canadian, and unemployment claims in the United States. Existing home sales, all right, which as you can see is set to rise pretty clearly here. So we could be seeing a further decline in the euro tomorrow. The dollar picking itself up off its behind and starting to run towards the end of the month in a bullish pattern. Okay, guys, this is all I had for today. Thanks for coming into the daily market briefing. Don't forget to hit like and subscribe at the bottom of the video, and stay tuned with us Monday through Thursday at 9 a.m. British time every day. Again, my name is Rick Majors, and have a happy trading day.